Welcome everybody, and today we'll discuss about the medical treatment related benefits. Many a times the employees or their family members suffer with diseases and they have to be admitted to hospitals. Lot of medical bills are there, and really it's a tough time for the employee. Now in this tough time, if the employer helps the employee, then the employees will be most loyal to the employer, correct? So in relation to the medical treatment, if the employer spends the money, it is a perquisite taxable to the employee. But here, if employer is helping in tough times to the employee, should government tax the amount? I really don't feel. So government also supports by giving lot of exemptions. Only small cases, few cases are taxable. So what are they? Let's try to understand. Suppose if the treatment of the employee, so I am discussing case 1, then 2, 3, 4, 5, 6 तक जाएगा, ठीक है? So first case I am discussing. If suppose if the treatment of the employee or family member is done in employer's own hospital, or maybe employer's clinic, or maybe employer's dispensary, some medicines were given, whatever it may be, right? So if the treatment is done of the employee or family member in employer's own hospital, dispensary or clinic, then whatever amount spent by employer for the treatment of employee is fully exempt, right? Not taxable at all. Suppose example, some employee is working with I'm not able to recollect. Okay, Narayana Hrudayalaya, right? So wonderful hospital, great hospital. They do a lot of heart surgeries, and one of the employees' family member had a heart attack or any issues like that. The hospital treated the employee's family member, ensured that he recovers from all the difficulties. So in that case, the Narayana Hrudayalaya as an organization, the employer giving treatment to employee's family, employee got a benefit, correct? But the benefit is fully exempt. Okay. Now whenever I try to give examples, I try to give examples of some holistic organizations, right? Second case, let us come to. If the treatment is done in government hospital, second case. Government hospital means it may be central government hospital, it may be state government hospital, it may be a municipality hospital, local authority hospital. Any hospital is okay. But if treatment is government hospital, generally government don't charge anything. But if suppose some amounts have to be paid, the amounts were paid by the employer to the hospital. So if the treatment is done in government hospital, whether central or state or local authority, if any expenditure is paid by the employer, that is fully exempt in the hands of employee. It is a benefit to the employee, but fully exempt. Sometimes what happens, the government employees are there. They have lot of schemes like CGHS is there and many others are there. So they were taking some treatment in government hospital. But maybe in that hospital there is no proper facility available. Second point only I am talking about. Okay. So the government hospital referred the patient to any corporate hospital, and there the treatment is done. Now if it is government employee getting treatment in government hospital, or the treatment is referred in a private hospital by government hospital, all that expenses paid by the employer, that is government, are fully exempt. So this is second point done. Okay. Now in second point, two aspects we discussed. One is any employee, any employer is there, employer helped the employee to get the treatment in government hospital, all treatments were done, whatever amounts is there employer paid, that is fully exempt in the hands of employee, that's over. But suppose Government employee is there, he takes treatment in government hospital, that is anyhow exempt. But if suppose that government hospital refers the patient to any other private hospital and for that the government pays the money, that is also fully exempt. Now this only happens in case of government employees. Second case done. Shall we go to third one? Third one. Third one is something called as CCIT. CCIT means Chief Commissioner of Income Tax. CCIT means what? Chief Commissioner of Income Tax. Come on, repeat with me. Chief Commissioner of Income Tax. So any treatment is done of the employee in any hospital which is approved by the CCIT, approved by Chief Commissioner of Income Tax. And secondary thing which we should remember, the treatment is for specified diseases only. So come on, let's try to remember what happened. Third case we are talking about. Simply, the employee or family member is suffering from some health issue. That health problem is a specified disease, like tuberculosis is there, TB is there, AIDS is there, cancer is there, and many others are specified. So specified disease is there. Treatment is done in an hospital which is not government hospital, is a private hospital in simple language, but it is approved by the CCIT. In that case, the treatment is fully exempt. The employer paid the bill, right? It is fully exempt. Okay, wonderful. Fourth case, let us go to. Before I go to fourth case, I'll just ask you a question. Suppose what happened? Take the example of some Tata Cancer, Tata Memorial Hospital or Tata Cancer Institute. These are basically hospitals approved by the CCIT. Now here, if the treatment is done for cancer and employer paid the whole bill, then it is fully exempt. But suppose if the treatment is done for a small disease like fever, cold, then also employer paid the bill, but it is fully taxable. Why I am telling like this? Because if it is a specified disease, then only exemption is given in case 3, right? If it is general diseases, not specified diseases, then it is fully taxable. So case 1 and 2, all diseases, any treatment fully exempt. If it is employer's hospital or government hospital, any medical treatment of himself or family members, fully exempt. But in case 3, if it is approved by not a government hospital, approved by CCIT, that is private hospital approved by CCIT, then only specified diseases related treatment is fully exempt. Case number 4. Case number 4 talks about group health insurance. Many organizations, many companies take group health insurance in the name of employees. Many organizations take group health insurance in the name of the employees. So if group health insurance is taken in the name of the employees, then the group health insurance premium, whatever paid by the employer, if group health insurance is taken, employer only will pay the amount. Now it is a benefit to the employee, yes or no? It is a benefit to the employee. And when it is a benefit to the employee, should it be taxed or not? The question arises. And the answer is not taxable, fully exempt. Case 4 done. So when in the question they will ask you, the employer paid the premium for group health insurance of all the employees, then you simply say it is fully exempt. Come to the case 5. Employee took health insurance premium, health insurance for himself. Who took the health insurance? Employee took the health insurance, right? Fifth case is employee took the health insurance. Employee paid the money to the insurance company, but the employer reimbursed that money. Again, I am talking about the fifth case. If Fifth case we are talking about. Shall we go to the fifth point? Now concentrate. Hey, who took the health insurance? Employee took. Who paid to the insurance company? Employee paid. Then is it a benefit to the employee? No. But if employer reimbursed the same amount, then it is a benefit. And this benefit is also fully exempt. Okay, fifth one done. Now come to the sixth story, sixth case we are talking about. A very easy COVID-19 related treatment of the family members or the employee himself, right? We have suffered a lot in COVID, right? Many families. And I'll tell you one pathetic news I heard today. I was so frustrated because of the news that during COVID times, the CM of Delhi, Arvind Kejriwal, was doing renovations of his house. And how much he spent for it, do you know? 50 crore rupees only for renovation. That whenever we have windows, right, there is a cloth curtains. That curtain, each curtain costed around 8 lakhs rupees. Remote control based curtains. And I'll tell you, total cost went around 50 crore rupees. Such a pathetic thing which can happen in India, which we can think of or imagine. At that time, you would be shocked that central government was ready to give even the oxygen cylinders for free, but the Delhi government straightforward said that we don't have the vehicles to carry that oxygen cylinders. We don't have money to pay for PPE kits. We don't have money to pay to our employees. And what the CM was doing? The constructing or renovating, not construction, renovating his Sheesh Mahal. Such pathetic politicians will destroy our nation for sure. Anyhow, come back to the topic. So what I was talking about, I was talking about the COVID-19 related situation. At that time, everybody suffered. So if employer with his kindness supported the employee or his family members, paid the bills of the employee's treatment or family members treatment, then that is fully exempt, right? So simply remember the first 6 things which we discussed. First case is employer's hospital. Second case is government hospital. Third case is CCIT approved hospital for specified diseases only. Okay. Fourth case is group health insurance. Fifth case is employees health insurance paid by employee but reimbursed by employer. Sixth case is COVID-19 treatment. These all are exempt. Now other than this, if any treatment happens in India and employer pays for it, that is fully taxable. That is fully taxable. Let me tell you, suppose example you went to a private clinic that is not approved by CCIT and you got some treatment there. The employer paid the bill. That is taxable, right? I'll tell you some more things, just we'll complete some other parts also and then I'll discuss about it. Okay. Suppose if the treatment is outside India, then what will happen? There are only 3 expenses, correct? One is the treatment expense. Second one is the stay expenses, because for a treatment we should stay there, right? And the third one I forgot. Yeah, treatment, stay. For that we have to travel also, right? So travel expenditure. Chalo, let's start with the first one, treatment expenditure. So the patient's treatment exempt up to the RBI prescribed limit. So we are talking about treatments outside India. So when you go and do the treatment outside India, you should understand up to the RBI specified limits it is exempt. Beyond that it is taxable. So if employer pays for the treatment of employee or his family member, that too outside India, then treatment expenditure whatever it may be, minus RBI specified limit, that RBI limit is exempt, so we will deduct it, and balance is taxable perquisite. Now this taxable perquisite is useful for us. Okay. Second point, stay. Stay means, you cannot just go and take the treatment and come back fast, right? You have to stay for some time. So stay for the employee, or we can say stay for the patient and one attendant. This is the right word. Patient and one attendant. Exempt up to the RBI prescribed limits. Suppose employer paid the money for stay also. Suppose stay costs are around, suppose 3 lakhs rupees for the employee and his attendant. Sorry, patient and his attendant. Then RBI prescribed that up to 2 lakhs it's exempt. Then 3 lakhs is stay cost minus 2 lakhs RBI limit is exempt, 1 lakh is taxable perquisite. Now the treatment related taxable perquisite and second one, stay related taxable perquisite, is useful when we talk about travel. How? I'll discuss, don't worry. First thing, travel is either fully exempt or fully taxable. If your salary per annum for the whole year is less than 2 lakhs rupees, your salary per annum is less than 2 lakhs rupees or up to 2 lakhs rupees, then your traveling expenditure is fully exempt for the patient and one attendant. But if the salary is more than 2 lakhs rupees, then the travel is fully taxable. Now what we are checking? We are checking salary. So salary more than 2 lakhs, travel is taxable. Salary less than 2 lakhs, travel is exempt. Like this we should remember. Done? Done. But how to calculate salary? Salary includes everything. Basic salaries, allowances, perquisites, everything included other than the travel benefit. That means even whatever taxable treatment is there, taxable portion of stay is there, that is also included to calculate your salary. Okay. So basic salaries, allowances, everything is included, even perquisites, all are included, but also the treatment portion which is taxable, stay portion which is taxable will be included in the salary to check whether the salary is less than 2 lakhs, then travel is totally exempt. If salary is more than 2 lakhs, travel is fully taxable. Clear to you? Very good. We'll do some problems on that, no worries. Now till now we were all talking about the treatment of the employee or his family member. What does this mean? I'll tell you now. Employee, anyhow everybody know. His spouse and children. Obviously we cover in the definition of family. What we will cover? Employee, his spouse and his children are included in the definition of employee. Employee, his spouse and children are included in the definition of family. If I have wrongly used the word, no problem, just forget it. Family definition, employee, his spouse and children are included. But what about parents, brothers, sisters? The answer is they are also part of family only when they are mainly or wholly dependent on the employee. They also form part of salary. They are also forming part of family. Parents, brothers and sisters also form part of salary. Oh, employee. Again repeating for you what I said. Parents, brothers, sisters also form part of salary when? If they are mainly or wholly dependent on the employee. Now what about the grandchildren or grandparents or mother-in-law or father-in-law or cousin brother, cousin sister, nephews, niece? If they give anything as such in the question, they don't form part of family. And when it is not forming part of family, it is fully taxable in the hands of employee. So in most of the questions, whatever you get on medical treatment of the employee or family members, they give treatment of employee, treatment of spouse, treatment of children, then they will say treatment of grandfather, treatment of grandchildren, treatment of nephew. So grandfather, grandchildren, nephew, niece, then cousin brother, cousin sister, mother-in-law, father-in-law, right, any other law, all treatments are taxable to the employee if employer paid the money for it. Medical allowance is fully taxable, right? Medical allowance is fully taxable. And suppose if, now I am just asking you a simple question, whose name the bill will be? If suppose the bill, the hospital bill is in the name of the employee, please remember, is in the name of the employee, then whole amount is taxable. Sorry, I am wrong. If it is in the name of the employee, all these rules will be same, but taxability will be to all employees, right? Whether they are specified or not. But if the bill is in the name of the employer, if the bill, treatment may be of the employee, may be of the employee's family member, but in whose name the bill is? If the bill is in the name of employer, then taxable to specified employees only. But if the bill is in the name of the employee, then taxable to all the employees, and reimbursements are also taxable to all the employees, right? Like this we should understand all the topics which I tried to cover till now. Medical treatment related points, I feel you are totally clear. Now what we have to just remember, hey, if treatment is in foreign country, what we should remember, treatment and stay, for both the things up to RBI limit it's exempt, beyond that taxable. Travel, salary less than 2 lakhs, travel is fully exempt. Salary more than 2 lakhs, travel is fully taxable. How to calculate salary? Take everything including taxable portion of treatment and stay. Family includes self, spouse, children, and also includes parents, brothers and sisters only if they are mainly or wholly dependent on the employee. Medical allowance is fully taxable, that we understood. Now let's start solving some problems to boost our confidence. Hey, now let's see this question. Find taxable amount of perquisite in the following cases. So what they gave, what would be the taxable perquisite in these cases? Let's see. So Mr. Y has been allowed a fixed medical allowance of rupees 2000 per month. Now, in the question what they asked, you should carefully understand. Did they ask you to calculate gross salary? The answer is no. They asked you that you have to find a taxable amount of perquisite. So medical allowance of course is fully taxable, right? 2000 into 12, 24,000 is taxable, but it is not our main solution. Okay, let's come to this point number 2. Apart from reimbursement of petty medical bill of rupees 25,000. Now when there is a reimbursement of medical bill, it is taxable, right? So 25,000 is taxable. Z and his family got medical treatment in a dispensary. In a dispensary they got medical treatment, okay, maintained by the employer. So here it's only employer's hospital in which he got the treatment. Value of facility provided to Z and his family members during the previous year are as follows. So they gave in the question that how much treatment which family member they got. So Mr. Z's treatment in employer's hospital, देखो employees treatment in employer's hospital fully exempt, right? Mr. Z, his wife, spouse, So she is included in the definition of family. So her treatment also fully exempt. Major son of Z, independent. Now when we see this word, we feel, Arey, he is independent, sir. So it is taxable. Arey yaar, I already said. When I talk about family, self, spouse, children are family. And family's treatment is fully exempt. Okay? So whether it is major child, whether it is independent or dependent, doesn't matter. So this is also exempt. Minor daughter of Z. Minor daughter of Z. Okay, this is also children. So exempt. Then dependent younger brother. See, when I spoke about parents, brothers and sisters, when I spoke about parents, brothers and sisters, I said if they are dependent, then only the exemption can be enjoyed. Okay, so here it is dependent younger brother, so of Z, this is also exempt. So E point also exempt. Come to F point, independent younger sister of Z, independent, right? So this is taxable. That means 10,000 is taxable. Then dependent sister-in-law. Now, sister-in-law doesn't fall in the definition of family. Family means self, spouse, children. And family also includes parents, brothers and sisters if they are wholly or mainly dependent on the employee. Sister-in-law is not a family. So this amount of 5,000 is also taxable. Now shall we solve the question? Write down. Taxable perquisite in hands of Mr. Z. Taxable perquisite in hands of Mr. Z is as under. We'll simply write particulars amount. We will simply write particulars amount. Shall we go forward? First one what they gave. Treatment of Z only na. So A point in particulars will write Z, and anyhow it is exempt, so we'll write nil. Now you remember that Mrs. Z's treatment was done. So B point Mrs. Z. So that is also exempt. C point major son of Z, right? Independent. That is also exempt. We'll write nil. Write with me whatever I am saying. Don't just see the screen and okay, first I'll understand, and it should go on together. Okay, it is not that complicated. Chalo, fourth one, D. Minor daughter of Z, that is also exempt. We'll write nil. Minor daughter of Z, that is also exempt. We'll write nil. Then we'll put E. Fifth point, dependent younger brother of Z. So dependent brother, right? So it is also exempt. We'll write nil. Then we'll write F. Independent younger sister of Z. This you should be careful. This is taxable. Independent younger sister of Z. 10,000 fully taxable. 10,000 fully taxable. Dependent sister in law. This is also taxable 5,000. Dependent sister-in-law 5,000 taxable. Reimbursement of medical bill. How much? 25,000. Hey, that we forgot, right? That's the first point which we should have covered. That will tax. So reimbursement of medical bills 25,000. That is taxable. So how many items are taxable? 10,000 is taxable, 5,000 is taxable, 25,000 is taxable. So totally how much? 40,000 is taxable, right? So taxable perquisite 40,000. Taxable perquisite 40,000. Taxable perquisite 40,000. So this is how we should calculate. So in the question what they asked you to calculate what is the taxable perquisite. So these three items are taxable. We wrote it and we totaled it. That's it. But medical allowance not important, but still we will write a note. Okay. So note, medical allowance is fully taxable. We will write a note. Medical allowance is fully taxable. Medical allowance is fully taxable. Hence, the taxable amount is rupees 24,000. Hence, the taxable amount is rupees 24,000. Hence, the taxable amount is rupees 24,000. So this way we should solve the problems whenever they ask in the exams. Okay, they may ask you something like nephew, niece, father-in-law, son-in-law, daughter-in-law, right? All that in-laws are there, no? That is fully taxable. Okay, so those who don't fall under the definition of family, for them any treatment done by the employer, that is fully taxable. Okay, and in this question they did not give you that if the treatment is done in a Tata Cancer Institute for cancer of suppose spouse, then that is fully exempt. For fever of self, that is fully taxable. This way also they may ask in the questions. You should be ready to answer. Let's go to the next question. Illustration. Himalaya Limited reimburses the following expenditure on medical treatment of the son of an employee. Medical treatment of son of employee Karan. The treatment was done at UK. Treatment was done at UK. Wow. Treatment facilities in India, are many times better compared to other countries. Especially when it comes to dental treatment, across the globe people come to India because it is the cheapest and the best treatment, especially dental treatment. Yes, we should be proud of some things. And during COVID, millions of people died in other countries, but we survived because of the kada, the haldi, the something called as Zinda Talismans or Kapal Bhati, Ramdev Baba's yoga or the coronal capsules. So India has a rich heritage. We have some solutions which the foreign countries don't understand so easily. Anyhow, the treatment is done in UK. Best of luck to them. Traveling expenses are given 1,15,000. We'll come to this in the last. Okay. Stay expenses at UK. RBI permitted 45,000. and actual expenses are 70,000. So up to RBI is exempt. RBI limit is exempt. 45,000 is exempt. Balance is taxable. So how much is balance? 75 minus 45. 25,000 exempt. Very good. Come to the next thing. Medical expenses permitted by RBI 50,000. Actual expenditure 70,000. So that 20,000 is taxable. Okay. 50,000 is exempt. From 70, if 50 is exempt, then how much? 20 is taxable. That's it. Compute the taxable perquisite for the assessment year 2023-24 in the hands of Karan if his annual income for salary before considering medical treat facility perquisite was rupees 1,50,000 rupees. So okay, if your salary was 1,50,000, what the answer will be, and if your salary is 2 lakhs, what will be your answer? They asked. So there are two solutions to be done. Now let's start the solution. Why actually two salaries will make a difference is, if your salary is less than 2 lakhs including the treatment and stay, then traveling will be exempt. But if your salary is 2 lakhs, more than 2 lakhs, if you include a treatment, stay plus salary, then the travel will be taxable. So for that only this topic has come. Okay, let's continue. Taxable value of perquisite in hands of Mr. Karan. Taxable value of perquisite in hands of Mr. Karan is as under. So they did not ask you to calculate gross salary or net salary. They only asked you to calculate taxable portion of salary. So for that we are doing taxable value of perquisite in hands of Karan is as under. Write down particulars, then workings, then we have to do some details, then we have two cases, right? Case 1 and case 2. So we'll write that also. So particulars, workings, details, case 1 and case 2. 5 things we discussed. First one, medical expenses we'll think about first. But in particulars, we'll first talk about treatment, then we'll talk about stay, and then only travel. Okay, this sequence will continue whenever we solve any problem. So first is medical expenditure. Okay, now up to RBI limit it is exempt. The same thing we have to write. Amount paid in excess of medical expenses. Now in workings we'll write amount paid in excess of RBI permission, in excess of RBI permission and actual expenditure. Yeah. And actual expenditure shall not qualify for exemption. Right, shall not qualify for exemption. So what we wrote, amount paid in excess of RBI permission and actual expenditure shall not be exempted. So how much is taxable? 70 is the actual expenditure and RBI said 40. Okay, medical treatment, correct? I have to just see the numbers, I forgot, because medical expenses they gave 50,000 RBI limit, actually is 70. So we'll write down in the details, we'll write 70,000 minus 50. 50 is exempt, so 70,000 minus 50,000 and in amount case 1 and case 2, both the cases 20,000 is taxable. For treatment and stay there is no difference, so 20,000 is taxable. Wonderful, done. Come to the stay part now. Stay cost. In case 1 and case 2 20,000 each we wrote. Now come to stay costs. Here also up to RBI limit is exempt. Above that is taxable. Any actual expenditure above that is taxable. That we have to write. Okay. Stay cost in excess of RBI permission. Stay cost in excess of RBI permission and actual expenditure shall not qualify for exemption. Shall not qualify for exemption. So they are talking that RBI permission is 45,000. Beyond that anything is there not qualify for exemption. So in details we'll write 70,000 is given now for stay also. Yeah, 70,000 we'll write. Minus exemption is 45,000. So 70,000 minus 45,000. How much? 25,000. So 25,000 is taxable. In both the cases 25,000 is taxable. In case 1 and case 2 25,000 is taxable. Done. Now let's come to travel cost. Here we have to be careful actually, because travel cost is all dependent on your salary, and I'll tell you that there are two salaries given in the question. Case A 1,50,000 salary and case B 2 lakh salary. That's given, but salary includes taxable portion of medical expenses and taxable portion of stay. Okay, let's see. If you take case A, 20,000 plus 25,000, 45,000 is taxable, plus 1,50,000 salary. So totally how much it will come to? 1,50,000 basic salary plus 20,000 medical expenditure plus 25,000 stay. So totally 1,95,000 is the salary for the purpose of travel. 1,95,000 is salary for the purpose of travel. Now this salary is less than 2 lakhs, and that's why travel is fully exempt. Okay, so let's write down travel cost. Travel cost, we'll write the detailed notes. Okay, we'll write note also in the bracket, travel cost note, and in the case A we'll write nil. Case B, if you see, already 2 lakh salary. In case B they give salary itself 2 lakhs plus this 20 plus 25, so 2 lakhs 45. When it is 2 lakhs 45, it's more than 2 lakhs, correct? So that's why if salary is more than 2 lakhs, traveling is taxable, we said. So in this case, because 2 lakhs is the salary given plus this 2025, that is 2 lakh 45, that's why it is more than the limit given in the question, in the law, that if salary is more than 2 lakhs then travel is taxable. So here it is more than 2 lakhs, so travel is taxable. So how much is the travel amount in the question given? 1,15,000. Write down that 1,15,000. In case B, we'll write 1,15,000. Okay, that's it. Now we'll do the total. What is taxable perquisite? We can write now. Okay, total taxable perquisite Case A, it is 20,000 plus 25,000 plus nil. So case A, it is 45,000. Case A, it is 45,000. And case B, 20,000 plus 25,000 plus 1,15,000 also, correct? So it will come to 1,60,000 rupees. 20 plus 25 plus 115. 1,60,000 will come. Very good. Okay. So this way we did. But did we write the working notes? Without writing working notes, can we leave any question like that? If we do, we'll unnecessarily lose marks for being lazy, not writing working notes. Write working notes. Give detailed explanation for whatever working you do, whatever solution you do. That's very important. Now write down. Note. Travel cost shall be eligible for exemption. Travel cost shall be eligible for exemption only if gross total income of the assessee, only if gross total income of the assessee does not exceed rupees 2 lakhs. Gross total income of the assessee does not exceed rupees 2 lakhs. Which can be evaluated as under. Now we have to calculate, right? Which can be calculated as under also we can write. Now we have to again write particulars case 1 and 2, right? Oh, 1 and 2. Yeah. So write down particulars case 1, case 2. Draw the table. You all know salary is given in the question itself, correct? So salary is given in the question. Write down. Annual income from salary other than foreign medical perquisite. Other than foreign medical perquisite. Other than foreign medical perquisite. Case 1, we have in the question 1,50,000, so we'll write that. Case 2, in the question itself it is given 2 lakhs rupees. Correct? Now for the purpose of considering whether travel is exempt or taxable, all salaries, all perquisites should be taken. That too including medical expenditure and stay we discussed, correct? So that we'll try to include. Add medical facility. Add medical facility. So first one, medical expenditure perquisite. First one, medical expenditure perquisite. Now in that 20,000 is there in both cases, we have to write the same, right? In both the cases it is taxable on same lines. So medical expenditure perquisite 20,000, 20,000. Same way stay costs also 25,000, 25,000 in both the cases. Right? Now we have to do the total. Write down gross total income for the purpose of. Let's write down gross total income for the purpose of foreign travel medical facility. Foreign travel medical facility. See, 1,50,000 is given as salary in case 1. plus 20 plus 25. So 1,95,000 will come. In case 1,50,000 plus 20,000 plus 25,000. So 1,95,000. That's it. In case 2, 2 lakhs plus 20 plus 25. So 2,45,000. 2 lakhs plus 20 plus 25. 2,45,000. Now in case 1, hey, case 2 everybody wrote right, 2,45,000. Case 1, salary is 1,95,000, less than the statutory limit. So what the law says, if salary is less than 2 lakhs, then what we discussed, salary is less than 2 lakhs, what we discussed, traveling exempt. So that's why in case 1, traveling cost will be nil, not taxable, right? Because salary is less than 2 lakhs. In case 2, salary is 2,45,000. It is more than 2 lakhs. That's why 1,15,000 is taxable, and that's what we did in the solution. Okay, like this we have to solve the problems, boost our confidence. I feel you enjoyed this lecture. We'll meet in the next lecture. Till then, take care. Bye bye everybody.